I think as we look forward into later this year and particularly next year, I'm very optimistic. Our bookings for 2026 are up in the double digits. As I mentioned, corporate transient demand has continued to be good. And I think that on the leisure side, it will continue to improve because candidly, as I mentioned, like in 2024 was a little soft. This year's been a little soft. So I'd like to believe that come 2026, we'll put some of these sort of headwinds behind us and those easier comparisons will sort of allow us to have better growth.
I'm here today with Jeff Donnelly, CEO of DiamondRock Hospitality. Jeff, welcome.
Thank you.
So Jeff, in your meetings with investors, is there a key strategic theme that you're focusing on?
The message that we've been delivering to shareholders has really been focusing on driving our FFO per share and free cash flow per share. I think if you look at the hotel industry, has historically been one of the sort of softer performing real estate sectors, and I think a lot of that has been driven by the fact that the industry has not done as good of a job as it really needs to on capital allocation. It's probably spent a little too much on improving its hotels than it needs to. And so the message that we've been delivering to shareholders is that we're going to be intensely focused on really driving our earnings per share going forward. And that's, we think, was going to ultimately lift the valuation of DiamondRock above and beyond that of our peers.
And how do you see business and leisure travel patterns shaping up for the rest of this year and into 2026?
Near term, the leisure side has been relatively soft. I think some of the pressures from inflation and certainly near-term headlines around international visitation have been really a catalyst for the leisure side to be soft. That's something that we saw even late last year, but certainly it's continued into this year. It has not worsened. It's just been sort of more consistent. The corporate side of the business or business traveler, both meetings like such as this, as well as just business transient guests, has actually been very healthy. I think as we look forward into later this year and particularly next year, I'm very optimistic. Our bookings for 2026 are up in the double digits. As I mentioned, corporate transient demand has continued to be good. And I think that on the leisure side, it will continue to improve because candidly, as I mentioned, like in 2024 was a little soft. This year's been a little soft. So I'd like to believe that come 2026, we'll put some of these sort of headwinds behind us and those easier comparisons will sort of allow us to have better growth.
How are changing interest rates and capital market conditions impacting deal flow and valuations in your sector?
It's a great question. The hotel industry is not fully recovered its deal activity. Pre-pandemic, we probably did $30 to $40 billion of transactions a year as an industry. It's probably been $3 to $5 billion since that time. Each year, it's been much thinner, and I would think when you delve a little deeper, that tends to be much larger hotel transactions. So if you sort of carve those off, the depth of the market, I would say, is much more shallow. I think some of the reason for that is that there are many assets that have still been struggling since the end of the pandemic. And it's not so much the interest rates as it is that banks have been maybe a little more inclined to allow borrowers to kick the can down the road and get more time to have assets recover. So you haven't seen as many assets come to market, and so there's been fewer transactions. Or in some situations, because of high interest rates, it makes it a lot more difficult to acquire assets and do so profitably, but sellers want to sort of look through to a better time when maybe interest rates are lower and unwilling to sort of change their pricing. It's a long-winded way of saying there's a big disconnect between buyers and sellers and what they want to pay. To me, that does create an opportunity for us going forward. I think there's opportunities for us to sort of be reinvesting in our own portfolio. And I think eventually when the tide turns, the key is to be able to be capitalized as we are, where we have a sufficient amount of dry powder to really sort of fuel growth in our portfolio. So might not be today, but I think on the come later.